Hello everyone, this is Evan from the Trade Risk here on Wednesday, February 10th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, leading and lagging sectors, and then get into some individual names for the remainder of the video. Now, jumping right into today's action, a flat day ended up closing down just 9 basis points here in the SPY ETF, but that was quite disappointing given that we were up almost 1% or maybe exceeding 1% earlier in the day. Now, we did have Janet Yellen speaking this morning, which was, an event coming into today. But let's take a step back. Let's look at where we've come from. So since the January sell-off, we've rebounded and we carved out this range in between roughly 187 and 194.50. We since then have broken down from that range at the start of this week with this gap lower. Reminder that, Friday we did close on the lows right into the support level. We opened this week lower with this gap lower. Yesterday we just hung in there, went sideways with a lot of volatility. Today, same thing with a flat close once again. This time we tried to probe up and look where we failed, right where this very important level was last week. In the past 2 weeks, right at this 187 level, which was previously offering support to the market, is where we found resistance today. So a close on the lows. Heading into tomorrow, these are the levels that we really need to have on watch. So it's the lows from this week at 183. It's the highs from today, or really this 187, 187.50 band of resistance right above us. And I think this is the immediate range that we need to pay attention to. If we start closing below this week's lows and making new lows, all bets are off. I think the trend is clearly, back in control, heading lower. And that certainly is the path of least resistance, probably the most likely scenario at this point. But for now, there's a little something for bulls and bears right here. Of course, the trend is lower. Fast moving averages racing lower in bearish alignment, above price, steeply pointing down. Those are all very bearish momentum hallmarks of sort of a bear trend. The one constructive piece I think that the bulls are still holding on to, it's a big one, but if it breaks, we're in trouble, are these lows from this week. We had kind of all, we had everything sort of pointing to retest and perhaps even break below the lows here in January in the S&P 500 earlier this week, but the market didn't do it. Now, we'll have to see now that Janet Yellen's speech is out of the way, maybe, the market has more or less clarity on future Fed policy. Perhaps we see a real move start to occur here into the end of the week. We'll have to keep that on watch. But for now, I think these are the levels you need to watch. I think you still need to remain defensive here. Long is very selective. You want to try and certainly stay in the stronger sectors and, some of those outperforming names. But by and large, it's still a very difficult market. You need to be defensive. You need to be aware that risk can happen very quickly, especially if this level is taken out. I definitely think you need to be careful here. So very important to watch. We're still keeping things pretty defensive. We have just, 1 or 2 longs on right now, partial positions. That's the way we're navigating this. And we do have that sort of hedged or, alternate exposure on that doesn't correlate so closely with the SPY. If we look at some other markets, now again, IWM, these are finding support right now at the January lows. So they're already challenging them. They're trying not to break below it. Again, all the similar comments apply here. Fast moving averages racing lower, bearish formation. The downtrend is clearly intact and in control, and you need to remain cautious here until we can either go sideways for a few days and then start to lift higher, or just move sideways, digest through time. That's a healthy alternative as well. The Qs recovering a bit today, outperforming a little bit, still close on the dead lows, an ugly close all around for the indices. So this one, again, underneath this very important $100 support level, which is now to be expected resistance if we can get back up there. That's an important area for this market to try and reclaim. Clearly, it made an attempt today. It failed. Let's, again, see if this can move sideways here instead of, and hold these lows instead of continuing its trend lower. That's certainly what the bulls need to see to turn this kind of ship around here. Now, if we look at some other markets, TLT continues to just race higher. It is now it didn't even really stop at these prior highs here from 2015 in April or so, where we ended up rolling over right around 131. We just rocketed right through that today. So, again, very strong trend here. Lots of rotation into bonds here, and no reason to believe that'll end anytime soon. The trend is your friend, so continue to play in this if you're exposed to it. It's tough to chase, but it's been tough to chase, for the past 2 weeks, and it just continues to grind higher. So TLT still a monster, looks good. USO just the complete opposite, 2.69% down day today, and yesterday was a brutal day for oil as well, down 5.25%. Yesterday, we saw a slight signs of life here as we retested January lows, and we got a little bit of a bounce off of it, and we kind of asked ourselves, well, maybe this range is starting to develop here that will begin to move sideways and trade in for the next couple of weeks, months, however long it takes. Today, with some more follow through to the downside, I think it paints a bleaker picture, more so that maybe we're just going to continue our trend lower, make a new low, and just keep exploring lower prices. So we'll have to see how that all shakes out. We tried to go green today, we failed. We closed on the lows. So new closing lows here for oil, for USO. Certainly not constructive at all. Would not want to be long this right now. Need to see us at least pop back up, take out today's highs, or get back at least above $8.15 to show us and prove to us that there is some real support down at these levels. UNG, a tough day as well, not quite as bearish of a formation as oil is. You can see it is still off of the year-to-date lows, or I should say the 52-week lows, because these lows were made in December. You can see we're still potentially trying to make a higher low here. This support is pretty important, right around 7.25. You got this little declining trend line here. So really, to get bullish, you need to see a break and a surge above $8. I think that would be an interesting move higher. I would be interested in potentially playing that for a breakout. Realize that this is still a very damaged long-term trend, but perhaps the early formations, early signs of bottoming is going on here. Natural gas, the metals, gold continues to move higher today, up 0.75%, holding this gap higher here, extended and pushing above all these fast-moving averages, but still looks very constructive. Again, similar to the TLT trade, tough to chase. However, this keeps grinding higher. Silver, very similar situation here. Didn't gain as much on the day as gold, but still up 28 basis points, looking good, still extended from some of these fast-moving averages, but certainly the chase here is sort of still on. We are still in this trade. We got long it back here on Wednesday the 3rd, so a week ago. We've sold half the position now, and we continue to hold half, and this one is continuing to work nicely, so we'll just trail our stop here and exit when the market sort of tells us to. And then, of course, all of this sort of fueled by the dollar here as it continues to roll back over. Metals were under pressure early in the morning as the US dollar was gaining some strength and bouncing. That all reversed here by the close, and subsequently that launched some of the metals and some of those commodities, although not oil, in the opposite direction. So UUP, which is the US dollar index, if this fall continues here, 2450, these were the lows back from 2015 where we found some support. So perhaps we're headed back down to tag these lows. Maybe we'll find some support there ultimately. If we look at some different sector analysis, really, the only standouts to me today were semiconductors, which were exceptionally weak. You can see they're now looking like they're about to break below the January lows here. So the lowest close now for the year in the semiconductors. They look like they're certainly in trouble. Financials still look one of the worst sectors out there right now. Real estate not looking so hot. Even the cyclicals. All of these are pretty much the overly beaten up names, or sectors rather. that we've seen so far this year. As far as on the upside, it's utilities really, and utilities which saw a big reversal today. We do still own a position in the XLU, and we're continuing to hold on to this, but this was down, pretty sharply earlier in the day, but it had a nice reversal here. It's going to clear above 46 3/4 to sort of leg higher, and the weekly and long-term charts just look real nice right here after basing out for a couple of, well, almost 2 years really. If we look at some individual names, we'll go through these pretty quick. Apple still holding up. 93.50 or so. Looks like some support's coming in here. Let's see if it can continue to move sideways. Ended up closing poorly, but many things did. So more sideways here I think is constructive. The trend is lower, but let's see if Apple can finally put in some type of bottom here. If not, then it's tough to look for lower prices down maybe around $85, $90. Those would be some of the key levels I'd be looking at below there. Google continues to hold up as well. 685 or so. These were the lows here from the 20th of January, and now these are the lows basically from last Monday, the 8th, or I'm sorry, this Monday, the 8th. So let's see if these can continue to hold going forward. There's a lot of room to move lower if these do decide to break here in the short term. So keep an eye on that. But so far, Google's found a little bit of support. Amazon, the weakest of the bunch. I know they did announce a buyback after hours today, and I know it's trading up closer to 500 right now in the after hours. So basically just a few percent up from where it closed. Still one of the most difficult, one of the most bearish looking names here as far as the recent leaders are concerned. 475 or so have been the lows. Not so sure that those can hold. Looks like a pretty arbitrary level right now. May need to unwind a little bit more, but certainly oversold. We'll have to see. Certainly extended right now from some of these fast moving averages. So maybe a slight pause here. And then we'll have to see what Amazon really wants to do moving forward. Netflix caught a nice bounce today, did fail trying to get back above $90. This is a big level for Netflix. This was effectively a big breakdown level right around $94, $93 right in here. This was acting as support going back over a year now. So as long as we're below that, we should certainly see some pressure in Netflix on the downside. So it still has a lot to prove, and likely needs more sideways action before it can make a real solid attempt at moving higher. If we look at Facebook, this one here is just kind of stuck in no man's land. Made an attempt higher again, but couldn't quite hold on to it. Still closed up 1.5% today, so that is constructive. But really, the bigger range, 92 to sort of 107. Above 107, we had this quick breakout, which ultimately failed. So I think this is pretty much the range that we're going to be playing in for the foreseeable future, until Facebook can start to digest, consolidate, and then make its next directional move. Finally, Twitter reported after hours. Right now it's trading at around $15 or so, which is essentially exactly what we're looking at on the chart. So it's back to the close, up just a little bit after hours after digesting some of that earnings report. This one still has layers of resistance above it. 17.25 is really the first one. Then you have the highs up here right around 18.50. So downtrend still very firmly in control until we see that change. It looks like the same downtrend is still intact. And then finally, Tesla, which is also reported after hours. It is higher, close to 160 right now in the after hours. So essentially the highs from yesterday. It's still in a strong downtrend, snapped some important support right around 185 or so. So this one could move sideways here, but still very bearish formation all around. Certainly in a void, just needs to prove itself if you're trying to pick this one up from the bottom. And that's all we'll go through for today. I don't have any trade ideas that I've scanned through just yet, but hopefully this rundown helps you out. And as always, thank you for watching, and I will catch you next time.